Happy Thursday. We're up, but we're off of the highs. Russell just turned negative. Elsewhere, the global markets are mostly up. China's had a great session, up about 2%. I do want to point out it's been really rocky, though, the last couple of months with the concerns about trade. Look at these markets. They're way off of their recent highs. China's 20%, Brazil's 16%, Korea 12%, Japan. A lot of global markets are in correction territory, at least 10% off of their highs, even Germany down about 9%. Here in the U.S., we started off strong on the transports. Of course, the airlines were up on the Delta news. Energies have been up and down all week. It started up. It's down right now. Industrials generally have had a good week. Semis are kind of flat. Mostly they're up. That's mostly because Broadcom is down a little bit, down 15, 16%. Take a look at the airlines. You see Delta. A lot of people said, gee, Delta lowered the numbers. But remember, there's a lot of talk there about what they're doing, concentrating on reducing capacity there, and a lot of positive comments from them. So you see Delta's just basically flat. I want to point out, it's been a terrible year. Americans down 30% on the year. So they've already priced in these higher fuel costs. American's chart has been essentially straight down. We're about to begin earnings season. A number of companies have already reported, but as I keep pointing out, the numbers are positive, and this is why the markets keep holding up very well. A lot of people say, well, how much of it is really the tax cuts? We know it's about a third. So we're expecting 20% earnings growth. If you back out the tax cuts, pre-tax earnings are up about 13%. So 7 percentage points of the 20, 1/3 is due to the tax cuts, but the rest is just the company's profits are better overall. And by the way, it's not cost cutting. That story is 2 years old. Revenue growth has been great this year. Take a look. We're expecting 8% in the quarter here, 8% in the third quarter, 6% in the fourth quarter. They were half of this last year. So real revenue growth, companies are actually growing their top line, and that really is what matters here. Earnings growth, I make it very simple. People say, what could derail the whole parade? You got to stay in what I call the 20% club. In other words, second quarter, third quarter, fourth quarter, we're all expecting earnings growth above 20%. That Q3 number, remember Q1 was 26%. Q3, we're likely going to beat that first quarter number of 26%. 23 will probably go to 26. So as long as these numbers stay up in this high level, above 20%, most analysts feel that the market's going to do very well. Finally, just want to point out we're up 23 companies have already reported, and the numbers have been good. 24% earnings growth, revenues up 12%. That's a very good leading indicator. We are already off to a good start, JP Morgan. Tomorrow, right now, 119 on the Dow. Carl, back to you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.